A share is a unit of capital of a business. You use the capital to run the business. We have three types of issuing of share. You have shares issued as par, shares issued as premium, and shares issued as discount. We want to solve an example of issue of shares. Illustration number 1. A company is issuing 1,007% preference shares of 1 naira each, payable 10% on application, 20% on allotment, 40% on first call, and 30% on second call. Applications were received for 1,550 shares. A refund of money is made in respect of 50 shares, where for the remaining 1,500 applied for, an allotment is made on the basis of 2 shares for every 3 applied for. The excess application money is set off against allotment monies asked for. The remaining requested installments are paid in full. You are required to prepare 1. Application allotment account, 2. Bank account, 3. First call account, 4. Second call account, 5. Preference share capital account, and 6. Balance sheet. Now the solution. Now starting from the question now, we have 1,007% preference shares of 1 naira each, but the application we received was for 1,550 shares. Now, the money will be paid into our bank account. So we now look for, we call it application. It will be 10% of 1,500 shares they were applied for. That will give us 155 naira. Then when I told that 50 shares were refunded back. The 50 said that 50 shares that were refunded for is 10% times 50. That will give us our application. That's refund. So it will be 10% of 50. That will give us 5 naira. Then we also have our allotment. We said that our allotment is 1,500 naira in the proportion of, for every 2 you apply for, you'll be given 3. So invariably we have 1,500 naira left, 1,500 naira shares left, times our 20%. We have 1,500 naira times the 10% that is excess, because we said application were received for 1,550 shares, and a refund of money is made on 50 shares. While for the remaining 1,000 naira applied for, an allotment is made on the basis of 2 shares. The excess application money is set up against allotment money. This excess application money, which is 10%, times the excess of 1,500, that will give us our allotment money. So we are using the allotment money against the application money. So that will now be 10% of 1,500. That will give us 150 naira. Then our first call is 40%. So 40% of 1,000 naira will give us 400 naira. This will be your first call. 400 naira. The second call is 20%. Our second call is 30% of 1,000 naira. That will give us 300 naira. By the time I add everything together, this now give us 1,005 naira. Our balance CD will be 1,000 naira. We close the 2 sides, 1,500 naira. This is the money we receive from the bank. Then we now go to application allotment account. We're going to do double entry principle. The application money that we received of 155 naira, you now bring to the credit side. You now say bank 155 naira. This is money on application. Then bank again, this is money on allotment 155 50 naira. Then there is a refund of money. We also call it bank. This one is for the refund. That's give us the 500 naira for the refund of money. So now we are now going to use for allotment money. Allotment money is 20%. So 20% of 1,500 will give us 300 naira. Now say preference shares capital 300 naira. So the two sides will now be added together. This will now be 305. This will now be 305. That's application allotment money. There are first call. On the bank account, it's on debit side. If you go to bank call account, to be on the credit side, double entry principle. So we now put here bank 400 naira. And the corresponding account will now be preference share capital. Preference share capital. That will now be 400 naira. For the second call, we also put here bank 300 naira. And the corresponding account is our preference share capital 300 naira. Then we now open our share capital account. Our share capital for application and allotment, we have 300 naira. For first call, we have 400 naira. For second call, we have 300 naira. Everything now give us 1,000 naira. And now have a balance CD 1,000 naira. That's for our preference share capital. Then the last one will be our balance sheet. We prepare the balance sheet. So for the balance sheet now, we now have for current assets, we have our bank. The money in the bank is 1,000 naira. And the issue shared capital, we have preference share of 1 naira each. That will give us 1,000 naira. So this is our account for the issue of shares accounts. These are the 6 accounts to prepare when doing issue of shares account. Thank you.